morning. I'm Richard Calhoun with Creekside Realty, a real estate broker, 40 years in Silicon Valley. We're here to talk about the real estate market and the impact in the last week. This is the magnitude of overbidding, how much buyers are overpaying. You can see the color scales on the right-hand side over here. If we had any blue areas, which we don't, that would be somewhere from 96.5% to 100%. 100% is no color, and then from 100% to 110%, starts to become shades of red. So you can see every area on here is above 100%. So they're all shades of red. Although the Menlo Park Atherton area here is pretty hard to tell is red. It almost looks white to me, but that's because it's only 100.6%. So it's 0.6% of shading of pink, which is up quite a bit just from last week. But that gives you an overview of single family homes in the different micro markets in San Mateo and Santa Clara County. Same concept here, but now we're looking at the frequency of overbidding. Frequency of overbidding is how common is overbidding. And you can see it's a much redder color. The Menlo Park Atherton actually is blue, and that's because it's a 39%. Anytime you're below 42.5%, I start shading it blue. Saturated blues at 20%. On the top end, saturated red is at 75. So you can see that the Milpitas area up here is getting pretty close to 75%, and it's actually 76.3. So it's over the 75. It's saturated. I can't go any higher than saturated red. Now we're looking at days of unsold inventory. To me, this is the leading indicator of what's happening. The biggest single change that popped out in me was the Palo Alto Los Altos area here. It increased up to 51. I believe we were significantly under 50. I think we were about 35 last week. So that's a fairly significant increase in just a 1 week period of time. A lot of it has to do with simply the holidays. But again, you can see the single family homes in all the different micro market areas. In general, it's a pretty strong marketplace. And if you look on the days of unsold inventory here, the vast majority are under 40. 40 and below is my definition of a seller's marketplace. That's clearly a strong market. Now what you're looking at is all the different micro market areas, and it's pretty hard to see what's going on. On the right-hand side of the graph, you can start seeing some of the lines are going up, some more than others, but that's each one of the different micro market areas. The previous slide drops out condos and townhouses and does an aggregate for each one of the single family home micro market areas. Moving on, this slide might be a little confusing. Instead of being on the right-hand side for the current data, we're actually on the left-hand side for the current data, and that's because we wrapped over the new year. So these are weeks down here, so we're currently at week number 2. We're looking at days of unsold inventory. The yellow line, the gold line, is the 5-year median. So you can see the first week and second week is right on the 5-year median. So what am I comparing it to? I'm comparing it to 2015 through 2019. Those were all 5 good years. So 2021 is a great year to start off with. And I will point out that this says 2020 up here, and that is correct because the vast majority of this is from 2020. I will probably change that in the very near future to 2021. I'm not sure I'm real comfortable with this, but the first 2 data points are this year. The third data point is next year. And so now what you have to do is decide in your own mind, is this jump up because the market was a higher DUI, which is a slower marketplace, or is it going to follow the trend of last year versus the trend of this year? Now, one of the things that I will point out that was happening last year that is not happening this year is the 49ers were in the playoffs. Anytime there's a discontinuity in the marketplace, something going on, real estate's an optional event. So I will maintain and have for years that some of your buyers were busy getting ready for the Super Bowl and that kind of thing. And so they weren't doing real estate. So you had less sales increases your DUI. That's why this was up in 2020. And in 2021, I suspect it will be much closer to following the gold yellow line, the 5-year median. And then you can see that last year we got right back on the 5-year median before we hit the shelter in place order, and the market slowed way down initially. Once we could start showing homes, it recovered, and we've been having, last year we had a stronger year pretty much the whole time. Now we're looking at what I consider to be the 3 components, and there's really 2 components. There's the supply and demand in a free economy. So we have 2 measures of supply. One is the total available, what level is the water in the reservoir, and the new listings is how much water came into the reservoir in the last week. And then the red line, or the rust line, is how many offers were accepted, how much water went out the overflow or out the drain pipe. What you're looking at here is the blue, and you can see that last week, the first week of 2021, we were at about 150% of the available inventory. And now we're at week number 2 and we're at 140%. Week 3 is obviously last year's data, so you don't want to go there. Typically, if you have 40% more supply, you start raising the flag. How is this possible based on what we're seeing? Well, remember, this is macro data, which is Santa Clara County, San Mateo County, single family and condos and townhouses. And if you dig into the data, and I have not done this, but I would almost wager quite a bit of money that the condo townhouse market has a lot more inventory, and even San Mateo County has some more inventory, where Santa Clara County single family homes, if we were plotting just that, I would suspect this inventory would be very close to 100% or potentially below 100%. Moving on to the gray line, the new inventory, you can see that last week we had 20% more inventory than you would expect. This week we had about 35% more inventory. And again, that would tend to say that the level of inventory is going up and the pressure buyers are feeling is going down. But now you have to go and flip over and look at the new offers. And last week we had 60% more offers than you would expect. This week we had 40% more offers. So the offers being accepted are greater than the new inventory, and the new inventory came in this past week, hasn't even been on the market for people to make offers on. So there's actually a lag between the offers and the inventory. And so what we really are having is an increasing marketplace of more demand than supply, because if you look at this week, you had 40% more sales, but last week you only had 20% more listings. So you ate up 20% of the number of new listings you would have expected. Here we're looking at just the total inventory. And again, it's just the first 2 weeks. Here's week 1, here's week number 2. Now you can see you're quite a bit above the 5-year median. If we went back to the other slide, it was 40%. And if you read the numbers, 975 up to something probably about 1,300 is probably very close, or should be exactly that 40%. So you can see that we had more inventory last year, went into the Super Bowl, and we had more inventory because the buyers take the time off and the sellers don't. And then we got back to normal. Then we had shelter in place. And so shockingly, all last year, inventory was exactly where you expect to, except towards the end, basically after Labor Day, where we had actually more inventory. But again, it's all 4 components of it: Santa Clara, San Mateo County, condo, townhouse, and single family home, where some markets, i.e. specifically Santa Clara County single family homes away from the San Mateo County border, is absolutely on fire. And if we were plotting that, that would be below the normal inventory. So even though I fine-tooth this a lot of different ways, in some ways that's still not enough data. And again, now what we're looking at is the number of new listings. A week ago we were above, you can see normal would be 300 and we were probably about 360. This week we should have been at about 340 and we were actually at about 425. So you can see a lot more new listings are coming on the market than you'd expect, but I expect them to be eaten up by the new buyers, the offers. And here you're seeing it. Last week we would have only had expected about 120 offers and we had about 210 offers. This week, we would have expected about 200 offers and we had about 325 offers. So you can see that the offers are outstripping the extra supply of new homes. Here's the overbidding, and this really tells you something. This tells you how much the buyers are feeling the pressure. And a week ago, you were basically at 58%, and maybe this week you're at 57. So that says 57% of the seller buyers are offering the seller more than they're asking. The big drop here again is because we're going from week 2 of 2021 to week 3 of 2020. So last year, which started off to be a good year, and you talked about anybody about before the shelter in place, and they were saying the real estate market was on fire, but that was only at somewhere around 45% of overbidding, and now we're somewhere around 55%. So this year is stronger than last year was before the shelter in place announcement. Now you're looking at the frequency of overbidding of each one of the different micro market areas. And if you look at this, for the most part, it looks fairly flat over here. You can see one area here, this sort of orange line dropping way down. But when I look at that, I think that's Foster City. Foster City has very few homes in it, maybe about 6. So the fact that there's, one less person could have overbid, and that would pull that down quite a bit. So you have to look a little bit at the magnitude of the different micro market areas. Here's the overall magnitude of overbidding. Same concept. You can see that the last week we're somewhere around 103.3%. This year it looks like we're about 102.9%. A year ago we were only at 100.7%. So you're essentially 2 full points plus a little bit of more, and this is the magnitude. This is how much above asking price. So last year they weren't even paying 1% above asking price, and this year they're paying almost 3% above. So you can see the big impact that 1 year has. And this is that same thing broken down for each one of the different micro market areas. I have bolded the Santa Clara County data in red, single family, and you can see it's basically been on a slow, steady increase, been a little bit flat. But if you look at the last couple of weeks here, it looks to me like it's turning up again. This slide is, we're looking at the macro data. We're looking at it for the last 20 weeks. The red line is the current line, so you can see it's right in there. We had a few times here where people were really overbidding, but this is still one of the best lines. You can see it's sort of on the top of the pack for the bulk of the area. So that says that the closings for the past week from last Saturday through Friday night midnight are basically some of the strongest overbidding distributions that we've had. The dotted lines are the best December we ever had and the best month we ever had. And yes, this is December data. I have not changed over to January yet. And the blue line is the worst month ever and the worst December, both of which were December 2001. And that's why the line is more solid. And now this is just blown up a little bit, dropping off some of the data points. So here you can see in the mid part where this past week was one of the strongest weeks. And even up here, it really wasn't one of the strongest weeks, but you're talking about only 15% of the marketplace from this point over. And I'm not sure what it means on the outside like this, because these shapes of these graphs are normally pretty consistent. And one of the things I'm finding is when I'm doing a lot of only 1 week data, the overbidding really does fluctuate quite a bit. So I'm questioning to some degree in how much I can really analyze it to the degree I tend to. So now we do have 2021 data on here, which is the red line here. And you can see it's one of the better lines. The 1 year that outperforms us is 2017. And you hear the last half of 2017 and the first half of 2018 were just phenomenal years. Basically, the current year is, pretty close to tied for second place. Now, yeah, there's quite a few close to contenders. There's like 3 years here that are tied for second place. But that's pretty amazing considering what the economy has gone through. But the real estate market has done exceptionally well. Here you're starting to see some of the bounce in the line. And this is more bounce than normal because it's Santa Clara County single family homes only. So I'm getting rid of San Mateo County, getting rid of condos and townhouses. And with fewer data points, you have more fluctuations. And even though this says 2020 in big print, if you read underneath the 2020, you can see it says 2021, and it is 2021 data. Here we have the same thing, just lower dates and the same comment, even though it says 2020 up here in bold underneath, which is what the computer data did. I wrote this up myself on the 2020. Underneath, you can see it says 2021. Now what we're looking at is the sale price distribution. This is what I call the 10 percentile, the median, which is 50, and the 90 percentile. So in any given area, 80% of the homes are between the prices. So you come over to the right-hand side, and the median is the middle, and that's what the color is based on. And then the lower number to the left is the 10 percentile pricing, and the number to the right, the higher number, is the 90 percentile pricing. So if we take something like South County, Morgan Hill, Gilroy, San Martin, the lowest sort of price you can buy is about $750,000 for single family. The median is basically right at $1 million, and the 90 percentile home is right at about $1.5 million. So it basically is telling you that 80% of the homes are between $750,000 and $1.5 million in that $750,000 range. Yes, there are homes more expensive, and yes, there are homes less expensive, but only 10% of the homes are less expensive than $750,000, which is not a lot of homes to pick from. Now, what's interesting to me is look at how close the shading is on these areas here. It almost looks like I left it off. But then if you look at the actual numbers, 1.91, 1.89, 1.87, they're all very close together in pricing, which is nothing, it's been getting closer, and this is the closest I've seen it. Redwood City is normally cheaper than Bay Cities and Foster City, and right now they're roughly all the same price. Just sort of an interesting observation. But the bluer the color, the more affordable the area is. The redder the color, the more expensive the area is. Here is the individual data points for the data we've been going over. So this is the micro market area. This is Santa Clara County single family homes. This is San Mateo County single family homes. And in the bottom corner here, you can see a breakdown of the different areas. And then this is condos and townhouses in both counties. And with that, I'll pause and see if there's any questions before going on. I will mention that the handout is available for anyone that wants it. I believe it's actually turned out to be 49 slides this week. If you're not familiar, you just take this dark, or the bright green is the base URL. To get to the meeting, you put in 2021, the current year. To get to the archives that's available later today, you put in the 8-digit code. To get the handout, you put in handout and the 8-digit year and code. And this is the version. And this is just showing the sale price to list price distribution. And each one of these is a week, but look how much fluctuation there is between the lines on this for every single week. That's sort of surprised me. I would have thought with San Mateo County, Santa Clara County, single family homes and condos and townhouses, there's enough data points. But what I think it's doing is saying that there's so much non-homogeneity in my sample size that I'm actually doing a bigger blending, more disruptions, because you could all of a sudden have more condos sell, which would be at a different sale price to list price ratio. I could have more San Mateo County sell than Santa Clara, which would change it. And what I'm trying to do in my own mind, and we won't get into the discussion here, I'm trying to determine which one of these lines is best for me to follow for tracing. This red line is nice and stable, but you have periods of time here where it's right at 100% and you don't learn anything about what the market's doing. You get up here at 90 percentile and your fluctuation is quite a bit. This is 85 percentile and this is 75. Right now I'm leaning towards the 75 percentile because you can see that even though the frequency of the discontinuity is as much, the magnitude isn't as much. Like we'll look at this section right here.
Can you explain a little bit about those, the serials 11, serial 16, 18, and 19 at the bottom of this graph?
Yes, that's just, it's not identified, but I happen to know the red line, which is 11, is the 50 percentile. So this is the sale price to list price, 50 percentile. So 50% of the homes sold for higher than this, 50% sold for less. Then the yellow line, which is, I think you told me 13, is 75 percentile. The green line is 85 percentile and the blue line is 90 percentile. So normally what I was thinking of doing is matching doing the same thing that I do for sale price, 10 percentile, median percentile, which is 50, and then the 90 percentile. Most statisticians use 25 percentile, 50 percentile, and 75 percentile. And since I'm not trying to span the range and I'm trying to use it for a market indicator, I'm thinking of doing the what normal statisticians do because the stability of it. The jump from this point to this point is less than the jump from here to here because it's just bounded more. I'm also considering saying this macro data really isn't useful anymore. I developed this and it's something I normally stayed away from, developed this to see what was happening on with the pandemic, and clearly the market's on fire. So what we'd really like to know is what's happening to the sale price to list price ratio for single family homes versus condos, townhouses, what's happening in San Mateo County versus Santa Clara County. So it's more minutia. And here's the table for December. This is monthly data. It starts on the first of the month. It goes for 35 days, which is 5 weeks. And now we're back to the weekly data. We're looking at 11 different metrics. We're going to look at one graph for the most part of each one of these metrics. This is the days of unsold inventory. Now, look at the gray line in San Mateo County. It was skyrocketing, did a little dip, and then skyrocketed again. This is really slowing down, and it's worth paying attention to because if it continues to slow down, the market will change in that area. Now, Santa Clara County isn't moved nearly as much and is basically fairly flat, and the condo townhouse market is fairly flat. So I do not know why San Mateo County is having the days of unsold inventory go up so rapidly. What it's saying is you're either getting flooded with inventory, which I don't think is happening, or what I suspect is happening is you're having a lack of buyers. And with a lack of buyers, all of a sudden the supply starts to be way disproportional to the demand. And then the sellers that need to sell or really want to sell drop their price. We're not at that point yet because, we're just, here is 40%, 50% would be about here. So if I was to guess, this might be about 45, 47.5%, something like that, or days. So we're not to the point where we expect price depreciation, but to go from a number like 22, 23 days to a number like 43 days in just a few weeks, because back here is the 19th of September. So in less than a month, in basically about 3 weeks, we gained about 3 weeks of days on unsold inventory. And that's sort of my threshold of when I think the market's changing, is when the market is either accelerating or slowing down by more than 1 day in the days on unsold inventory for every day that elapses. Now, the only reason I'm not sounding the alarm particularly is because it's over the holidays and anything can happen over the holidays. Here is San Mateo County because it was unusual. I put San Mateo County in the different areas to see what was happening. Every one of them really seems to be going up. The blue line here, which looks like the coast, is fairly flat. Their coast doesn't have a lot of properties. So one of the bigger areas is the Bay City, which is the blue, and the Bay Cities was down here, and now it's up here. So the Bay Cities is sort of driving the area, and that's the cities like San Carlos, San Mateo, Burlingame, Millbrae. So those areas that the cities that are on the Bay side in San Mateo County is what's really seems to be slowing down. And now we're on to the frequency of overbidding. This almost seems like an oxymoron because we're talking about San Mateo County slowing down, but yet the overbidding is increasing. So how do you explain that? You explain it by the closings are 5 weeks back. So this is reflecting where the market was 5 weeks ago, not where the market is right now. This is the magnitude of overbidding. And again, you can see San Mateo County, the magnitude of overbidding went up more than in Santa Clara County. But again, there's the 5 week delay. So what's happened in this data point is what happened in this days unsold inventory won't be reflective in the overbidding for, the 5 week delay. And since you're going back only like 21 days, we have at least 2 more weeks to wait before we even start to see the impact on the overbidding. Here's your days on the market, which is what most people follow. Median is the midpoint. And you can see, and this happens at the first of the year all the time. The reason this is dropping down is you had very little inventory at the end of the year. So as new inventory comes on the market, it comes on the market with 0 days. So the downward trend you're seeing here is not unusual. This also is a lagging indicator compared to days of unsold inventory. This is the currently available inventory. Here's where you can start seeing some of the differences. If you go back here to basically go back to a year ago, because now I have not truncated, so we have a little bit more than a year showing. San Mateo County single family homes and Santa Clara condos had roughly the same number of homes. Now you come over here and San Mateo County single family homes are up, but not up drastically. You might be at 250 versus 200 last year, but the condos were 200 last year and now they're 400. So there's double the number of condos that there were on the market in Santa Clara County just a year ago. And that's a pretty significant increase. That's an indication that the market is going slower. Santa Clara County, even if and this is worth noting because a lot of people are saying there's just no inventory. Here, last year, you were at 400 going up. This year, you were at 400 and going up. So we have exactly the same amount of inventory that we had last year. And people were saying last year was a good year. They were basically saying it was a great year. And they said it got ruined by the shelter in place. Well, we have the same amount of inventory. What's going on is we have a lot more buyers. And the reason I still maintain we have more buyers is with shelter in place, people's housing needs have changed and they're trying to move to a different property to better meet their needs. What I find interesting, and there's no way to know what's going to happen, but in basically 2 months from now, we're going to hit April 1st. And on April 1st, a seller can close escrow on a property that's over 55 and move their property tax even up in value. So I think that starting around mid-February, we may start seeing a lot more inventory coming on the market as a result of Prop 19, which was designed to encourage real estate transactions. And I have a feeling that is what it's going to do. And so we're going to see a discontinuity coming up, which is going to make it harder to have a grasp of what the market's doing. And we'll have to wait and see if that really happens, but that's my suspicion. Here you can start seeing the number of offers. So last year we were down here and we had 400 offers. Now we have 600 offers. So you can see the bigger magnitude. In San Mateo County single family homes, maybe you were about 175 and now you might be about 205. So, it's slightly up, but not up nearly as much. But even the condo market that I was saying where the inventory is doubled, you had about 210 offers back here, and now you're somewhere around 300. So their number of offers is up by 50%, but their inventory is up by 100%, and that's why it's doing so much slower. Now we're looking at closed transactions, which is the same slope as the previous, just delayed by the 5 weeks that it basically takes to close an escrow. You can see that this is going down. This is going down because the volume of transactions usually decreases as we go into the end of the year or holidays. Here's pricing in the different micro market areas. We'll talk about it here where you can see it a little clearer. Basically these are flat for the most part, and again, it almost doesn't make a lot of sense. San Mateo County here appears to be going up. But again, this is what was happening 5 weeks ago and isn't reflective of the increase in days unsold inventory that we're seeing for the last 3 weeks. Here's the median price. Again, I would call that flat in all the categories for the most part, and that's a little more stable. When we were looking at the previous slide, that's 10 percentile, so you're only looking at the lowest 10 percentile. And here's the 90 percentile. So this is the top end, and it bounces a little bit more because when you get to the top end, prices can go all the way up to 20 million, 30 million, $40 million occasionally, and that causes them. And one doesn't cause it to go up, but if all of a sudden you have 5 homes sell above $4 million, it brings that number up more than it would bring the median up. But again, for the most part, I'd call those fairly flat. Duration of escrow, it's flat. It basically went from 25 days to 30 days for all 3 of those indicators. Now we're looking at your days on sold inventory, and this is my map, and we finally don't have it jumping around. The right-hand index here with the numbers will jump a little bit, but I think I even got that a little bit more stable. So we're going back 4 weeks plus a day. So we're going back to the 4th Saturday back, including today. So there's going to be 5 slides. And as we step through this, we're progressing up in a week. And what you're looking for is the change in color. So here's what it was on the 19th of December, the 26th of December, the 2nd of January, the 9th of January, and current day. And look at just the change from last week, especially right here around the San Mateo County border. See how this is pretty white and this is pretty red? Now we just go 1 week and now you got pretty blue and pretty white. That's a really telling sign that the market slowed down. And that's the concept of those groups of slides. And with that, I've wrapped up what I have. Happy to answer any questions and go from there.